Okay, hi everyone. Thank you very much for joining tonight's panel. I'm very, very grateful to all the speakers who came to share their opinions about the current situation on the market and also to listen to our startups who will be pitching a very good group of startups that we selected especially for this event. So first I will start with presentation of Astra Global. Let me share the screen. So, one moment. So Astra Global is a global business development company that helps startups, investors, and corporates to meet each other. And we are doing this event together with our partners, Global Ventures Investments, and we will talk about our collaboration just in a sec. So what we do at Astra Global is we do warm introductions to venture capitalists of startups who are already ready and prepared for funding. And we know a lot of investors personally, and we can do a careful selection for startups of investors that are targeted and that are really suitable for them and save their time running around the market and trying to do cold calling and cold emailing people. And what we also can do is me having a 10 years background in M&A law, working for private equity companies, we can help startups to do deal structuring irrespective of the law applicable, despite I'm not a US lawyer or Swiss lawyer, etc., but I know the structures and I can basically advise on startups which clause is good for them, which clause is really bad for them, because startups, when they find money, they tend to be super happy and they tend to agree to everything, but this is not the right thing to do. You need to be careful with investors. The investors, I think you need to agree with that, not to lose your company and to have a good negotiations power. And I want to introduce Kobe Calderton from Gold Ventures, who is helping me with this event. Kobe, you can introduce yourself in our partnership. Thank you.
Thank you very much, Elena. My name is Kobe Calderon Jacob. Originally, I'm from Israel. My background is from the army. I served in the Israeli army 25 years, specialized cybersecurity, because I spent a lot of time in intelligence unit. I established a lot of IT companies in Israel. I'm part of groups of angels in Israel that include 522 members. We decided to open incubator in Israel, in Tel Aviv, because the ecosystem in Israel is very developed from the aspect of innovation entrepreneurship. We have a lot of capital, as you know. And we decided to open an incubator in Israel in order to help companies from the beginning, from the idea to global expansion, with a lot of consultants and mentors from US that lived in Israel. And after a very short time, after 3 years, actually now we are a global company that based in Tel Aviv and in Vienna. I moved from Israel to Europe. I'm living now in Austria. And we have partners in Brazil, in the United States, in California, in Europe, in 5 countries, especially in Poland, in Switzerland, in Germany, and Austria. And in Asia market, we have tight connections with Chinese investors in Shanghai, Beijing, and Shenzhen, Vietnam, and Australia. The main goal of GVI is to dive deeply to each company to see what is the potential that we can see in the company, not only from the aspect of technology and market. We try to analyze the skills and the execution skills of the founders. And based on that, we try to reduce the risk of the investors by matching our fund with foreign investors. This is what we have done in the Austrian market. Usually after a very short time, we bring a lot of companies from Israel to Austria in order to co-invest with groups of lenders in this place. So we reduce the risk by co-investing. And the second thing, we accelerate the companies. We build now global acceleration program in the countries in Europe in order to manage the projects and to give to all the startups the comprehensive solution that we can bring from our experience. And after the acceleration program, we help them to reach the potential corporate in order to make POCs, pilots, and to bring the product to the market in a very well-structured process. So in the end of the day, we are cooperate now with Astra Global, is our strategic partner, in order to team up together and to help the companies to grow in the global market. We can help you, the investors, to find the way how to cooperate with our investors. So in this way, you can reduce the risk. In the other end, we have a very good connections with grants from the EU. And especially now, in the coronavirus crisis, we have a lot of grants in Austria. So we can bring 80% of the money from Austria or from Poland, and we can match it with private fund that you can bring from your ventures. So I'm very, very grateful for this event. I'm very excited. This is my first time in this event. And I would like to let's go back to the panel.
Okay, thank you very much, Kobe. So now we will have the panel. You can see the panelists here. I'm doing the panel together with Anna. Anna, can you introduce yourself briefly? She's helping us with moderation of the panel.
Hello, everybody. My name is Anna Tutova. I'm CEO of Coins-Telegram, and we are a PR consulting agency for tech companies. And we focus on fintech and blockchain companies, help companies to spread the word about the activity to attract users and investors. And we help with different publications in business media and financial media like Forbes, Bloomberg, TechCrunch, etc. As well, we help companies with entering new markets in Asia, Middle East, Europe, USA, and Latin America.
Okay, thank you very much, Anna. So first of all, I would like our panelists to have a chance to introduce themselves. Adrian, can you please say a couple of words about you and your fund?
Sure. My name is Adrian Mendoza. I'm the founder and general partner of Mendoza Ventures. We are a Boston-based early-stage fintech fund. Primarily, most of our portfolio is focused on fintech, AI, and cybersecurity. We are location agnostic, so our portfolio ranges from everywhere from Canada to the US to London, England. Even within the US, we have portfolio companies in Silicon Valley, New York, Boston, Austin, Texas, again, Toronto, London. So the goal is finding fintechs where we have deep expertise, where we could leverage our background and that of our LPs, which is a collection of senior executives at banks and insurance companies that really work with us to find the best of the best fintechs, AIs, and cybersecurity companies. So excited to join this. Interesting to see some of the European companies that are presenting today.
Great. Katya.
Hi, guys. Can you see me? Can you hear me? Anyway, nice to meet you. Hi. Yeah, I couldn't join from my computer for some reason, but anyways, so we're based in New York. We invest in consumer companies, and we have quite unique revenue-based finance model. So other than revenue-based finance, we also provide working capital, and we have additional advisory help in terms of marketing and financial strategy to these companies. That's pretty much it. So we have basically investing. We started investing last year with the primary focus on non-cyclical consumer brands. And most of our LPs and investors are actually coming from Europe, so European family offices within consumer sector. That's pretty much where we are.
Great. Thank you, Katya. Xavier. Are you here, Xavier? Okay.
Oh, wow. I had to be the first to not unmute myself, so apologies for that. Xavier calling from Southern California, Tessera Venture Partners. We're kind of a stage agnostic investor in data. Specifically, we love the verticals of finance, healthcare, and media. And really along that, we strive to find companies that are doing exciting things in the world of data. And specifically, that's meant a lot of blockchain projects and artificial intelligence projects. And recently, our most recent investment was in Carta, kind of one of the latest fintech unicorns, and looking forward to chatting with my panelists and taking questions and seeing the startups present today.
Great, thank you. Elisabeth.
Hi everyone, Elisabeth here, calling out of Munich, Germany. We are a Series A B fund, Acton Capital. We do invest a little bit location agnostic, like Mendoza Ventures, in Europe, Canada, US East Coast, having some fintechs in the area of core banking platform, but also financial institutions in our portfolio. And yeah, very looking forward to the discussion and the panel today.
Thank you. Jean.
Hi, everyone. My name is Jin. I head the venture for Apis Partners, which is a venture and private equity firm based out of London. We focus on financial service and its adjacencies, such as healthcare and e-commerce. On the venture side, we run a managed account strategy where a lot of what you call the corporates outsource their corporate VC to us. So presently we're managing outsourced corporate VC for a top 3 US insurer. We work with banks and a lot of other strategics entering this space. And we invest globally with focus a lot on emerging markets.
Oh, great. Thank you. Boris.
Hello, everyone. So I'm the co-founder of ID Finance, based in Barcelona. We do digital finance in Europe and Latin America. So the last 2 markets we've entered are Mexico and Brazil, very exciting. And we offer consumer lending products across Mexico, Brazil, Spain, and looking to enter new markets in the next 12 or so months. Thank you.
Thank you. Gustav. Is Gustav here? Cannot see him. Jason.
Sure. Hi, everyone. It's Jason Miles. I'm the managing director and founder of VFS Innovation Ventures, which is the corporate venture arm of Volvo Financial Services. So Volvo Financial Services supports and is the captive finance company for Volvo Group. We lend to companies and customers that purchase Volvo products. But not cars. Cars are owned by a private equity firm now. We do everything across commercial vehicles, heavy duty vehicles, buses, and other large transport vehicles. We invest typically at the early stage, which I would call Series A and post Series C, Series Seed, and really look at companies that are in the fintech sector broadly defined. So payments, insurtech, AI, big data, and things that are related to mobility services that kind of affect the vehicles that we produce. Elena, you're on mute now.
Thank you. Cyrus.
Hi guys, my name is Cyrus. I'm the founder and CEO of Swissborg. Essentially, we do crypto wealth management. 2-3 years ago, we did a big ICO around pretty much every country in the world. And our mission is really to bring Swiss wealth management to everyone by making it fair, fun, and meaningful.
Great, Swiss and fun, good combination. Okay, let's start the discussion, guys. So the general idea is to share the ideas. How do you actually adjust to the current situation in the market. So the first question is rethinking portfolio companies go-to-market strategy, or in case of companies, existing companies, you guys just share how do you change, if you change current go-to-market strategies, what you changed and what you didn't change. So I suggest you just start, whoever first.
Well, I think, in our group, in ID Finance, we incubate quite a lot of projects regularly. And because we like, once we are present in one of the countries, we like to try different markets. And I think like the biggest difference that we saw, and actually that they materialized, and we had to postpone some projects and accelerate the others, the projects which are less capital intensive, they would go first now. Because I think one of the biggest impacts from this COVID situation was the overall availability of funding to start the business and to accelerate the business, to scale the business. So on our end, that was the immediate impact. We had to postpone the more capital intensive projects and accelerated sort of a project where you can test quicker with less funding. That's on our side.
Yeah. On our side, being in the US, and especially we're looking at companies that are selling to the banks, we saw a huge, very quickly reprioritization in what the banks, the credit unions were looking at. And really sort of, it was into three things that they were interested in, which was first one was how are they deploying things, COVID type of financial resources, PPP, EIDL, because they were able to, give credit and debt products without having it in the balance sheet. The second being mortgage refinance in the US is a really, really top priority. There's a lack of healthcare workers in the US. There's also a lack of more people doing refinancing mortgages. So anything that's playing in that space is getting right in front of the banks. And the third, which is important for this group, is infrastructure. Right now, more than ever, things that are cloud-based are getting priority, because in the US, we saw people like TD Bank that went completely virtual and through their VPNs couldn't access data points on their customers like balances, account numbers. And then their entire network went down for 2 to 3 days because of the amount of people that were on it. So we're finally getting to see the testing of the market in terms of their critical infrastructure, where we're going to see things that were on-premise solutions go to the cloud faster than the predictions of 2021 or 2022.
Okay, and Gustav managed to join us. Gustav, do you want to introduce yourself quickly and maybe answer the question? Gustav? He's just writing messages, right? I don't know. No sound. How do I do unmute? Unmute. So if you look at your screen, on the top right corner, there is mute and unmute.
Elena, you can unmute for him as well.
I try to see him. I don't know. I don't see him somehow. Where is he? Let me try. Ah, I know why. You joined through attendees link. Now I promoted you to panelist. Now you can speak, Gustav.
So much power.
Now you can hear me.
Gustav, please speak now.
Welcome.
Sorry about the speaker challenge, or perhaps I'm the challenge. Nice to meet you guys. Interesting to listen to you. I work at a company called Storebrand in Norway, Scandinavia. Probably you haven't heard of the company, but it's actually the largest asset manager in Norway, next to the oil fund in Norway. So I am the Chief Innovation Officer at Storebrand, and we are working a lot with partnering up with different fintechs and startups right now, because it's a very important tool in the innovation toolbox. And we also invest in a couple of them just to strengthen the partnership. So that's the reason why I'm interested in this panel. Really nice to meet you and to be part of this panel.
Okay, do you do any change of go-to-market strategy for your companies?
For the startups, you mean?
Or maybe you as a company as well, like what's changed? How do you adjust to the current situation?
Yeah, like 90% of the workforce work from home. I guess that's kind of a normal case worldwide. And we try to kind of mitigate the risks and have control of the risks, the financial risks. But during that process, we, from the beginning, started to focus on the opportunities during the crisis, and to also focus on the changing customer needs. So it's a lot of different needs that are changing right now. So we're trying to adjust the company to that.
Okay.
And also to help our partners, the startups that we are collaborating with. Some of them are in difficult situations, and we try to be on their side during this crisis to strengthen the relationship to them long term.
Great. Someone else has the idea?
I would add that I guess with the current situation now, there's such an emphasis. All of us are looking at runway and looking at sort of figuring out which companies are in a strong cash position, as well as myself specifically, a more narrow product focus. So previously, I would look at companies that were either dominating a small market that was on the verge of being an extremely large market, and there just needed to be a tipping point. And within that, there was maybe 3 or 4 different things that were required from a product perspective. While we still are looking at some of those companies, a lot of the emphasis on where we invest now are companies that are already executing. So we've kind of started to invest a little bit later, sort of a little bit ahead of where the growth probably might have happened a year ago. So I think that's kind of sped things up, which is why there's a greater emphasis on cash, why there's a greater emphasis on the product roadmap being much more narrow, and then also a greater focus on repeat founders and sort of that senior leadership, because I think all the investors as well as companies are looking to mitigate risk. And in these times, the exciting thing is that these are usually when the top companies emerge, right? So if you are those rare companies that are able to sort of break through and endure and persevere, you go down in history with some of the legends that we saw in the previous period. So we've kind of now taken that level of focus, 12 to 18 months minimum on runway, as well as repeat founders with exit experience.
Maybe I could comment as well. So from our perspective, it's a bit awkward because essentially, for those who know what's an ICO, it's initial crowd funding, which essentially enables you to sell your token, and the contributors get a token that they could use in your network, right? And we did that 2 years ago, a little bit more than 2 years ago, and we released different products and features, but our main product that we've been working for the last 2.5 years was about to be released in mid-March. So obviously we had planned 1,000 different things and a lot of different events, and unfortunately for us, well, things didn't happen as we wanted. And from this, Corona crisis or pandemic crisis, whatever you want to call it, they said there's 2 ways to go: rather the defensive mode or the more aggressive mode. And it looks like a lot of crypto related type of companies haven't done this, haven't been able to maybe go through this 2020 thing or to 2021. So for us, it was actually quite the opposite. So we went quite aggressive. We have enough funding. And I think so what's really good for us is that the first 2 months, we didn't have so much traction, which sucked. And we couldn't even do a high five between, everyone and just, open a bottle of champagne just to celebrate. So we really had that baby blues thing. But now it's really paying off the dividends. We're seeing like massive growth of 500, 700 people per day actually downloading our app. pausing our app and going into premium, and our token has just went bananas. It went like 350% in the last 2 weeks. So last week. So it looks like our strategy was good to be very aggressive on this. Obviously, in the long run, we'll see how things go out. But yeah, with this crisis, we got some good momentum, and for hiring the best tech people, as you guys know, it's the hardest thing. Now it's easier, which is really good for us too. So we took some action there, and we've been able to to recruit a few guys that we've been really wishing forever, and now they're like, okay, let's go into in Swiss. So for us, it's been a little bit awkward in the beginning, and now it's I don't know. It looks like things are finally paying dividends, so we're very happy.
I would like to give my perspective about this crisis from another direction. What we have done in GVI, in Gold Ventures investment, we try to see what is the opportunities in this crisis. So not only what is the threats, what is the opportunities. So what we have done, we decide to team forces with a lot of ventures, with a lot of funds in Europe, in United States, in Asia market, together in order to see what is the new needs that we can identify or we can predict that the world should have. And based on that, what we try to do is to make some pivots to a lot of startups in order to deal with these new challenges that we have in the world, in the new world that we are going to be in. So what in the end of the day, the results of this process is that because we are team forces with a lot of venture capital, with a lot of investors from other countries, in this way, we built a global acceleration program in some countries in Europe, for example. And the global acceleration program is financed by the corporates and by the investors from a lot of countries. And in this way, we reduce the risk dramatically, and we bring a lot of public funds from Austria or from Poland, and we match it with private funds. So in this way, the startups can survive. They're not stuck because they get fund from public, from a lot of countries that support them, and we make a lot of POCs and pilots in order to help them to grow in a specific market that we see that there is specific needs. So I think that in any crisis, we need to look for opportunities. And this is what we have done in Gold Ventures.
Anyone else wants to share the ideas?
Maybe if I could chime in, I think it's very. We've addressed this in a systematic way where the initial is looking at cash preservation, and then the second step is finding that opportunity, and then third is actually going after how do we pivot that business model if needed. And I'm hearing a lot of investors or companies start pivot too quickly, and you know, common example is going into digital health or telemedicine. The way the unit economics work in telemedicine right now is that telemedicine on its own is a very commoditized space, even before going into COVID. And so the rhetoric coming out of everywhere is, okay, let's do telemedicine. But what we have learned going into this and through this crisis is your capital efficiency matters quite a bit, and the VCs in the later stages. So we invest in later from Series B onwards, typically. If the unit economics are not working at that earlier on, we're not going to scale, right? And that's going to be even more clear cut after this crisis. And so a lot of the startups, I think, were their key KPIs were on growth, and now it will be more balanced at this point, right?
Thank you. So let's proceed with the second question. Did you rethink your portfolio company's priorities? What is more important for you? For example, cash flows or product advancement, sales, or anything else? And let's start with Adrian from Mendoza Ventures.
Well, it's funny because we've got global companies. Some of them had to actually, you know, as much as we wanted to prioritize on sales, like perfect example, one of our Canadian companies was focused on the US market. They can't come to the US market, the border's closed. And so that's one of the big things that had to get pushed out. And now more than ever, we have to focus on our global partners, whether it be other co-investors, whether it be LPs, whether it be channel sales opportunities for those that are in country, like in the US or in Europe, that actually can remain there and help them. So in that case, you know, I think someone said it really quickly that, you know, at the beginning, you just focus on cash flow. You know, once cash flow goes in, then you look at market opportunities. When market opportunities go in, you look at sales. So it really becomes this perfect triangle that everything has to be in balance. So for our companies, the first 2 weeks were, let's look at cash flow. And then out of that, several companies came up with very interesting market opportunities on the fintech side, whether it be focused on merchants, whether it be focused on writing some of the SBA sort of small business loans and tackling that. So it happened on a case-by-case basis. I think right now, we had already started seeing the trend of lower valuations. We'd started seeing the trend of, you know, I think someone also mentioned about more sort of cash versus growth. So I think it has to have the perfect balance, especially for the startups here, is you have to have the perfect balance of what is your COVID story. And your COVID story can't be you furloughed a bunch of people or everyone had wage cuts. Like what happened? Because everyone's going to have that same story. And so for the startups that are here, you have to have that story of what did you do different than everyone else?
Thank you. And Katya, what do you think about this? You are as well from New York Fund. How do you rethink the priorities for your portfolio companies?
Yeah, I would agree with everything that Adrian mentioned on there. Oh, sorry, Katya, I thought you just mentioned Carta. So
no, go ahead.
But you can continue.
Carta there.
I know.
I can go after you.
I'm fresh in the brain. I'll just quickly agree with what Adrian said, and then I'll defer my time to Katya and effectively say that, you know, there certainly is that priority on making sure that the fundamentals are sound, more so in a way that maybe was a little bit more excusable when you were in a 10-year record bull market in the US. And also for us, that would mean just also doubling down on projects that are core infrastructure. We all recognize that cuts are going to get made in this environment as companies look to lean out. So how is it that you, as a startup, can make yourself indispensable? And a lot of that could be flexibility. I mean, nothing more flexible than automakers making masks, right, or ventilators, which is sort of outside their core. One of my fellow panelists, Jason, I believe from Volvo, can testify to this, the agility of some of these companies. But yeah, I'll defer to Katya. Apologies for that.
No, I think that was good. I agree with you guys. For us, what's important is to make sure that companies are in a sustainable cash position in a way, so they don't have that dependency from VC cash. So for us, it's important that they're cash flow positive and getting at least to break even. So we're looking more into those companies, understanding that we still don't know what will happen until the end of the year, and we need to make sure that the company have a very lean approach to cash management and overall budgeting, so they can live through even without the fundraising. So for us, it's important to look into the numbers now even more than ever. If before we could sort of forgive certain things and be okay with companies burning too much cash, like for the sake of growth, but now we want to have that perfect, balance to make sure that it's more like a smart way to grow. That's what is important for us.
Thank you. And Elisabeth from German fund Acton Capital, what do you think about this?
Yeah, I was just thinking that there is a non-logical side to it, at least in some European countries, with the government programs that have been installed for topping up follow-on financing rounds. Thinking about Austria, there's such a program. In Germany, there's such a program. And in some cases, I'm observing this creates the paradoxical situation that you don't have to think about cash as much as maybe it would be necessary in the current situation, just because the government is pumping money in. In some situations it can be very useful. In others, I'm not sure that it's the right policy approach.
Thank you. Quite interesting that government supports startups in Germany. And Jean from London, from Epis Partners, what is your opinion?
So I think, if you look at your revenues, you get the most bang for the buck at retention, and also with relative to products. We had companies where if you are in a market where it's exposed to credit, it's going to be pretty bad. And so it's a matter of repurposing your product to an end market that is with minimal effort, to an end market that that is less cyclical with minimal effort, or sticking with your existing customers to upsell, because new businesses will be tough. If you take a step back, there will be new opportunities coming out of this slightly medium term. So if you look at open banking in Europe or any other country, payments for if you look at open banking, the payments has been the big issue. And a lot of the non-financial institutions, such as like a travel agency or e-commerce company that has not been as linked up and open to this open banking APIs, they're looking to use the payment vector to get into getting better conversion with the customers. So that's a way for a company to pivot and expose themselves to certain segments that are more open at this point.
Thank you. Good point that companies should orient on their customers. Boris, what do you think about this?
Well, actually, an interesting question that I was running through my head as listening to the panelists is M&A, right? Like we're talking about like how to prioritize the business, and in our company, a question of M&A became much more relevant, because even sometimes it became much more effective and efficient to launch a new product via an M&A. So we are now actually spending quite a lot of time exploring M&A opportunities. So I would be actually really keen to hear the other panelists on the opinion on the potential of an M&A. I'm sure everyone read like Revolut is looking to do something. Some other startups, especially in fintech industry, are looking to do some M&A transactions, and somewhat compressed valuations because of the COVID is making this a very interesting development. So whether it's a portfolio company growing via the M&A, whether it's just a company growing an M&A. So for us, it's very relevant, and we are looking to a couple of those transactions, and I'm actually very keen to hear others' opinion about this.
Thank you. And Jason, what is your comment on this?
Yeah, just to address the initial comment, there's two sides to that coin. The first is M&A in this environment, I think, is great for the buyer, right? Because valuations are somewhat depressed. but for the seller, i.e. the investor like all of us, we may whipsaw ourselves a little bit in exploring those opportunities too quickly. You know, I think we're going to be in kind of this range of valuation for, you know, another maybe year or two, but depending on the stage of development that you're investing in, earlier versus later, it might be worth it to, you know, to maybe wait just a little bit to see if the proof points that you were seeking during the investment have been met or not, to avoid, you know, undervaluing an asset based on a market cycle. You know, one of the things that we've been focusing on, just to kind of address some of the other comments as well, are two things for the companies in our portfolio. The first is pipeline optimization. So, you know, firing some of the clients that are lower on the pipeline that may have been more aggressively being pursued, and really focusing on kind of the top of the funnel, so to speak. You know, closing the deals that are already on the table. So that's kind of helped the companies that we've invested in maintain their revenue position and kind of accelerate on some of the leads that they're trying to achieve. And then the other side, which is a little bit counterintuitive, is what I would call like operational upgrades, right? So if you can't go and raise, you know, a new round, again, from our perspective, we invest at, you know, Series A and kind of late seed. So this might not be as relevant for a later stage, but if you can't go and raise another round because of the market environment that we're in, how can you reorganize the resources that you have in-house to more efficiently serve you know, the clients that you do have? Jen made a great point about retention being a very high lever in growth. You know, we've been working with our investments and founders to really figure out, are there untapped resources and internal value that you can, you know, bring to the forefront? A great example is an insurtech company that we're working with that was lacking in just core, you know, enterprise level project management capability. And, you know, this downturn and work from home environment that we're all in actually allowed them to recognize that they, you know, needed to double down or refocus on that, because once we do hit the next growth cycle, that's how they're going to be able to, you know, achieve more with the enterprise clients that they're working with. And they were able to do it by simply taking a little bit off of the plate of their marketing team, a little bit off of the plate of the business development team, and really refocusing it on, you know, pure project management. So those types of opportunities, especially with companies that are, you know, less than 50 employees, I think is a good way to unlock resources without having to go out and raise a huge round.
Thank you. And Gustav, can you share your thoughts?
Yes. First of all, perhaps I would like to clarify that from our perspective, we have two kinds of capital. First, we have the customer money or capital that we are managing. So that's the asset management side. So that's not the kind of capital I'm talking about in this panel. In this panel, I'm focusing on our corporate venture capital that we are investing in different startups. So I agree with previous speakers and Jason that it's interesting to see the different fintech companies right now, how they kind of refocusing, trying to earn money as fast as possible, not being forced to venture funds, trying to get into the companies at a very low level. So they are trying to focusing on earning money as fast as possible, and to stretch the time for the next round of venture capital. So that's kind of interesting. And also it's interesting to see how they are focusing on customer acquisition right now, because some of them can recruit customer at a lower cost because of people not buying AdWords and different kind of ads at the same amount as previously. So that can be a bit cheaper right now. And also how they are reprioritizing their products. So for some of our companies, focusing on down payment on consumer loans, that can be really interesting in times like this, because that can make end consumer saving a lot of money. So that's we can see a lot of different new needs and ways of working.
Thank you. And Cyrus, would you like to add anything?
I don't think so. I'm good here. Yeah, I said maybe what Boris was saying earlier. I think so. It is good time. The fact that I mean, we don't usually do any M&A or whatsoever. We haven't done anything so far, and I don't think so. We're really focusing on developing really our own products. But it's true that right now there's a lot of startups, especially in the crypto world, as I said, that are really financially negative territory. So there is really good deals. We are looking at different startups that have done great jobs, but they haven't monetized it yet, and are now looking for solutions to, rather merge or to sell. So we're looking at this more on a opportunistic level, and we'll hopefully, have something to do in the next quarter or so.
Thank you. Interesting to hear your focus. And Kobe, will you add anything?
No, Kobe has left.
Okay, anybody else, or we don't have time?
Maybe we can ask the next question. So the next question is like corporate VC versus financial VC. Like what COVID has surfaced having them in startups cap table. What's your view?
I guess I'll start. Probably.
And then I want to hear the corporate guys.
Yeah, exactly.
So
Exactly. Yeah.
Jake said I definitely want to hear your background on this one, but I think we could rip off each other and see where it goes.
Yeah. Interesting thing, just as an aside, about, just my personal background. So, I was brought in to Volvo from the outside, financial services, investment banking, VC world, because they did not want to have the stigma attached of a traditional, corporate VC strategy first, run and hide when the market changes, kind of a view. So, I would say two things. So first, there are corporate VCs out there that have started to duck and hide in this environment. But I think it's changed a little bit from historical periods where we've had some market turmoil. Historically, corporate VC hasn't been seen as a major driver of innovation and revenue or shareholder value over the long term. It's been seen as a way to get early exposure to companies that could potentially be purchased over the long term. More recently, i.e. the last five years, really, CVCs have started to see the value, and I think Volvo is one of them. We start to see the value in corporate venture capital as a tool for innovation, i.e. getting access to very early stage companies, not for their potential growth, but for their technology, for their R&D capability, for their speed. So, you know, the approach that we've taken has been to take very small minority positions, but attach large corporate revenue opportunities to the transaction. So there's a commercial arrangement that potentially outstrips the investment that we've made in the company. So that way we've aligned ourselves with the growth, and also gotten access to the technological capabilities that we're looking for. You know, what it does is it makes the corporate VC a little bit less of a hindrance or a tax on the company, because, you know, as I'm sure all of you have heard, sometimes if a CVC is on the cap table of a startup, investors get a little leery because they think, well, you're just going to sell to that corporate VC, or you're just going to sell to that company eventually. The way that we've discovered to get around that is, again, play a very small role in the capital structure, but play a very large role in the revenue generation for that company. So you get kind of a double effect on the investment. You know, it's worked it works when the company's founders and current investors understand the value of, you know, global scale. It doesn't work so much when the company and the investors think more in terms of, you know, dilution and, you know, current valuation, so to speak. So it's a much more long-term approach, but we've seen that it's starting to come around, especially in fintech, because a fintech company, I mean, it's very difficult to survive if you don't have some sort of large partner to help you move along. Especially if you're in a non-disruptive space. Crypto is not one of them. I mean, you know, you don't need a corporation to help you, you know, grow a brand new platform. But payments is an area that you definitely want to have, you know, larger corporate sponsorship, because I don't think there's going to be, this is just my opinion, I don't think that there will be huge amounts of disruption in that space without the help of large financial institutions.
Maybe if I could chime in, because we're kind of falling between. We manage corporate VCs, and a lot of the strategics would outsource to us as a financial investor. And the rationale is actually, there's a few things. One, at a very early on a startup's stage, if you take in too big a strategic money, it limits your TAM, right? If you're at a seed company and a corporate VC or a strategic takes 30%, 25%, it limits your addressable market. And so our LP, in this case, a top 3 US life insurer, said, you guys move faster than us, and you guys act as a buffer, and you do the commercial side, and we'll work with you on the strategic aspect. And after 7 or 8 years, you know, we facilitate the interaction with the corporate strategy team and the startup, but we're not actively, we're looking at this from a commercial perspective, and our LP is looking at it from a strategic perspective. But like, it depends on where the stage of the company is, really. Because if you're towards the Series C onwards, it becomes okay. If you get involved too early, and I've seen our some of the bigger LPs where banks or insurers get involved, they move too slowly. You know, the BUs get involved, and that cycle of adoption and implementation, if you're a startup burning cash 12 months, 18 months, you'll die in the POC stage, right? So you kind of have to balance that as a startup.
Yeah, from what we've looked on it, where we've partnered with Slack or Barclays Bank in some of our deals, and it has to make sense, especially at the early stage. One of the things that we've seen with the corporates that we work with is they started heavily into the investing in the early stage and then realized that it was like way too early for them. So now they're looking for like Series A or Series B where they could deploy more and make a larger impact. But very early on the startup side, if you have a really, really clear use case, you have a really clear reason of why Volvo is in there or Barclays Bank is in there, it makes sense as an investor, and especially on the VC side, why the relationship is there. One of the horror stories that we've seen is early stage startup or even Series A startup goes and gets 5 or 6 strategic investors, puts them on the board, and then there's an inability for the founder to make a decision because the corporate VCs don't have the ability to move fast, and they literally gridlock and deadlock the company and literally kill it. And so that's one of the things where we have to find the right balance of a right corporate VC that acts as a partner. The other thing that we've seen with some of the corporate VCs that they'll come in to invest to get early, allocation into the company, but that doesn't mean that you have a partnership in place. And that's really, really important is, yeah, you've got in some of the big guys, but are you actually having them as a customer? Because if they're on the cap table to be on the cap table and they're maybe making an introduction, but you don't have them as a direct partner or as a direct channel sale or as a direct customer, then to the startup, it really doesn't make sense for why you're there.
Yeah, it makes total sense. Along those lines, what we try to do is make sure that, number one, we don't take board seats, right? We don't want it. There's too many control factors that you just mentioned involved there. And we don't want to be seen as a hindrance to the startup, right? So we do take board observer seats so that we know what's going on with our investment, but we don't actively participate on the board itself. And then along the same lines, we don't take large positions. So we won't lead. We'll come in and look for guys like you, right, to lead, price the deal, and then we'll participate at the lower end of whatever deal that is to leave as much room for the financial partners as possible. Because quite honestly, strategic capital does not do a very good job of due diligence. So, financial VCs are much better at that than strategic capital. So, I think over time, we're going to see, and, Jen's platform is a perfect example of this. The hybrid approach is where it's going to end up, where some CVCs are doing more in-house traditional VC, and more traditional VCs are going to be doing more strategic type of investing. But I think that happy medium is going to have to be met, especially in certain markets where you need scale and you need it fast, right? And it's very expensive to advertise your way out there. So, if it's a pipeline approach, I think it works better. But if it's simply getting access to an early stage company, it typically wouldn't work, and you really should think about it.
Yeah, Jason, you're absolutely right. And Jen, I think your model is kind of definitely the future of corporate VC. We do a lot of work with Luge Capital in Toronto, and they're the corporate VC for a few of the banks. And it's a really, really good team because it's their VC first that happens to be the LPs. And that gives a little bit of flexibility from the corporate, because when we've done direct investments with corporates, they have compliance restrictions, whether it be voting or non-voting shares, or you called it right, whether they have a board seat or not a board seat. And so you as the founder need to know a lot of this detail, because even for one of our companies, one of the banks, that corporate VC said, well, guys, we can't come in for, we have to come in for this exact amount. We can't own more than 10% of the company, because in the US, there's certain laws that rely on governance so that there isn't large corporations owning multiple companies. And so because of that, you as the founder need to now do the math, so that if you capitalize the company, well, then they have to own a certain part. If you under, then they can't sort of get as much cash as you thought that you were going to get from them.
maybe if I just add one more to what Jason said, the alignment between the business units and the corporate VC is quite important in that the BUs are looking for what makes impact next year for them, right? They want to buy the next shiny thing. Whereas the CVC is looking at strategically 4 or 5 years in advance, trying to transform the company. So there is, that has to be managed well. And it's, yeah, I mean, it's a delicate balance.
It really is. It really is. And, one of the ways, because I'm living this daily between BUs and the startups. One of the ways that I keep everyone aligned is I say, look, this is not an investment for pure capital return. This is outsourced R&D, right? And that R&D has to have a return, an ROI attached to it. So lo and behold, if the ROI is realized, then the startup wins, right? So it is a delicate balance. It's really a hard conversation at the CFO, in the CFO's office, right? Because he really does, from a corporate finance perspective, he really does need to meet his next quarterly number, and to lock up, $1 million or $500,000, quarter over quarter, and not really see the return on it. It makes it a harder conversation. But as soon as you start to see some exits as well as ROI at the BU level, it makes it a much easier conversation. But you do have to temper their shiny object mentality, because everyone loves working with startups. All of us love working with startups. That's why we do what we do, right? So, but inside of a corporation, you have to temper that, because there is a lot of cash that can just be tossed at it, and a lot of cash can be lost very quickly without a longer term view.
Thank you. And we have just 3 minutes left. So very briefly answer who would like to comment more. What is the most important lesson from COVID-19 for you?
Have a really good home office. Because you'll be there a lot. And look, this isn't the first time or the last time that this is going to happen. So, for us, we saw that really early on. A lot of customers had problems, and just even sort of sales targets, just the idea of working from home and being remote. And you know what? For us, it's okay if a team is remote. I think our companies went remote, and you know what? That's okay as a founder, especially now, to be that you can continue remote.
And I want to add to this question, would you change something after this situation in your work? For example, you start working remotely and you don't come back to the office or something like this.
We haven't been to our office in about 3 months. I'm going to try to walk in on Thursday. I'll let everyone know how it goes.
Well, I think the main lesson is just don't panic for us generally. I mean, like, it's just another bump on the road. Some bumps are bigger, some bumps are smaller, but the world continues. I mean, I remember 2008, and I was working in banking, like in a large traditional bank, and people thought the world will end. Well, it didn't. Like now, again, people thought the world will end, and it didn't. So I'm sure everyone will have 3, 4, 5 bumps like that on their road, on their path. Just don't panic.
I think
really quick, very quick, so that everyone can share. Thank you. Yes, sorry.
Yeah, just quickly, I think this decentralization trend is applicable for VCs too. I think the trend with decentralization is, as you go towards building more resilience and fast decision making, you're seeing actually decentralization with decision making at our organization in the field offices. We have offices everywhere. And I think I've learned that actually not traveling, you can get 95% done without having to travel. And so I feel like I've wasted a lot of time just getting on planes, and it's just bad for the airlines, I guess. Yeah.
Do you think you will travel less after this?
Much less, much less.
That's great, actually. That's good for environment.
Maybe I have a little
anyway.
Maybe I have a little comment as well, is that I grew up in New York as a kid, and then San Francisco, and now I live in a village, Lausanne. It's a very small town in Switzerland, right? And everyone was making fun of me, like, usually you do the opposite. You're like born in a village and then you go to the big place, right? I think so this is gonna change a lot. I have a very nice view of the lake and the mountains, and my apartment is 2,400 francs, which is a lot because it's the most expensive country in the world. But I'm pretty sure that in New York and San Francisco for $2,400, you probably don't get that. And I really see that, like, a lot of our teams that are in the middle of nowhere, and they're like surfing in the morning and working very hard during the whole day, whatever their hours are, is that we're seeing a lot of people being able to work remotely distributed. We have 50% of our staff is always distributed on different places. And this trend is really, I think it's gonna grow. It doesn't make sense to pay $10,000 for an apartment in a city where you could actually, just move like 500 kilometers from that city and have that same apartment for maybe 1/3 of that price, or even 1/10 of the price. So I think that is probably going to change, and I don't think we need to all live on each other. The world is quite a big place.
Okay, great, guys. Thank you very much. Sorry that not everyone was able to join, but we need to start the pitching part. So first project is Verifio. Roy, are you ready? I promoted you. Roy?
Yes, can you hear me?
Yes.
And now you can see me.
So just to say to the investors, guys, you all received the Excel sheet. Please, I would be very grateful if you can fill it in for each project participating in the pitching. Let's start listening. Thank you. Please go ahead, Roy.
Okay, thank you, Elena, and thank you all for joining today. My name is Roy Dalal. I'm the CEO and co-founder of VerifyU, and I assume that just like me, you all hate passwords. And what we want to do in VerifyU is just move to the next generation of passwordless verification and give online users the security and the user experience that they deserve. And so it all started going back several years when Dr. Rafi Khan, the CTO of the company, just told me about the idea, and it just got instantly hooked. He told me about the patent and the researchers that are involved. And I decided to leave my place of work in CyberArk, a leading cybersecurity company, to found the company with Rafi. So do you guys like gummy bears just like I do? I hope you do. I love them. For me, they're delicious. But aside from being delicious, they have another use actually. So gummy bears can be used to hack fingerprints. I hope you can see the video properly. So you can take a gummy bear with a fingerprint imprint on it and just put it on a sensor. In this case, it's an iPhone 6, and you can unlock the fingerprint protection. And what it comes to show is that fingerprints can be collected from different surfaces. In this case, you can use a gummy bear to collect this from the fingerprint from the surface and then reuse it. And once your fingerprint is compromised, you can never replace it. It's not like a password that you can change. And same goes with face. So 4 out of 10 devices, according to our research, can be hacked using just a photo or a video. So here we can see another video showing just a person putting up a video in front of a camera and just unlocking the device. And in this case, also, once your facial information is compromised, you can never replace it once more. So this is the main issue with the existing biometrics. I see the video is a bit lagging, but you get the point. Here now you can see the unlock. And we can also see the latest trends with the facial recognition. IBM just recently, I think yesterday, said that they will abandon facial recognition for surveillance. So the trend is going to more private centralized solutions, which is what we're doing. And we're trying to offer the best from both worlds, both security and flexibility. So our solution can work across any device and platform, unlike fingerprints when you have to enroll on every single device or facial recognition. So this is what we're trying to do, get the balance from both parameters. And now I'm just going to show you a small part from a presentation that I've done to one of our prospective clients recently. So this is a user experience which is typical with banks. You put in your username and password and whoops, wrong password. Now you have to recover your account. You click on forgot password, and resetting password costs a lot of money. This, I didn't say it, Gartner and Forrester did. And now you want to recover your account, last name, put all this information here, and then you can maybe recover your account. And the way we do it is using what we call behavioral print by using what we like to call a super OTP or an OTP on steroids. You get like several letters on the screen that you have to handwrite instead of just typing. And this allows us to get two factors in one solution, which is the device, what you have, and who you are, which is the behavioral analysis of the user. And after verify you, the way it would look like is you just put in your username, no need for the password. Just get the challenge sent to your device, write the characters. You don't have to memorize anything. No private information involved. Just put in the characters and you get in. And if you want to recover your account, you don't need all this information. Just put in the last name, get the challenge sent to your device, and again, you're in. So much easier, more secure, and more friendly for the user. Now you can see just a quick demo, how it looks like in the application. You just get the characters, just write them down, and you can get into your account. And here's another example of a login to a bank account. Again, without password, just put in the user ID, social security number, or just a single identifier. And then you get the challenge sent to your mobile device. Instantly, you get two factors, which is the device and the behavioral analysis of the user, and you can get into your account. So the opportunity here is incredible. Over 80% of breaches were caused by passwords in the last years. And by 2023, it's estimated that the losses from fraud will be $48 billion. And the estimated market size we're aiming for by 2023 is around $21 billion. The business model is based on annual recurring revenues with maintenance and support. The solution can be either sold directly to the bank or via an OEM or white label using a third party. And the channels, currently we're working with our inside sales team. And afterwards we'll move to value-added resellers, integrators, distributors, and we will streamline the sales process as we go and we grow the company. This is our funnel at the moment. We have one running pilot, which is was supposed to start in April, but was unfortunately delayed because of the situation. Hopefully we'll start in the next 4 weeks. My hope will not get delayed again. Additional companies that we're in contact with, you can see, you can probably notice that from the financial industry, it's not just traditional banking, but also payment solutions, new generation fintechs. This is what we're aiming for at the moment. The banks have a lot of money to pay, but they move slow. The new generation fintechs have maybe less money to put down, but they can move much faster. So we're trying to even it out.
You need to wrap it up now. Sorry, you already spent 6 minutes.
Oh, okay. I thought you were going to give me like a 1 minute before, but fine. Just quickly go over the progress we had. We're going to launch our product in the third quarter this year. We're seeking a minimum of $500,000 to supplement our previous investment. And we raised so far 2.2 million, in the last round 1.2, and we're looking for a supplement to that round. So thank you all, and we're Verify You. We want to help the world move beyond passwords.
Okay, thank you very much, and please feel free to ask your questions. We have 4 minutes.
Hi, it's Lawrence here, Finch Capital.
Hi.
Hi, thanks a lot for the presentation. Very interesting. I was just wondering, sort of from a user perspective, how accurate is it? Let's say I'm using this quite often. I need to sort of type in these letters as you just showed us. How accurate is that side of the solution, and how often do people who are actually the people owning the account get their own password wrong?
Okay, that's a great question. there's basically standards for these performance metrics. So we're aiming to get our FIDO certification using a FIDO certified lab at the end of this year. And their requirements are around 3% FRR and 1 to 10,000 FAR. And we're not there yet, but we hope to be there soon. We're around 5% FRR with the same FAR. So we're improving the solution. And by the end of this year, we want to get our FIDO certification, which will also help in the sales process, obviously, once we have the certification.
Clear. Okay, thanks.
Yeah.
How would you compare yourself as versus a company like Secret Double Octopus?
Yeah, I hear that name a lot lately. And what they
because
do,
they can do other form factors too, right? So.
Yeah, okay, that's a good question, another good question. Secret Double Octopus, it's basically a soft token, which doesn't have a single point of failure. Let's call it their technology is that the token is on different servers and the device. So there's no one point of failure, and you can unlock the device token using facial recognition, a PIN code, the fingerprint, and so on. So this is their technology. Our technology is the behavioral analysis. So for me, in the long run, they can even be a partner. So they can use our verification solution instead of the fingerprint or PIN code to get access to the token on the device and then access the account. So it may be in the same space of authentication, but it's not really direct competing solutions. Also, one of the drawbacks that they have, and this is like one of the biggest unsolved problems now in the industry, is that what happens when you have a new device? When you have a new device, you need to register it once more. And with Secret Double Octopus, you have to put in your password or do some other fallback. With VerifyU, because we store the data centrally, there's no private data involved whatsoever, either on the cloud or on-prem. You can pick up any device, even if you signed up with an Android or an iPhone, pick up any other device and access your account immediately. And then you just rebind your device, and then you get the second factor as well. And this is something that currently doesn't have a golden standard, and this is what we're aiming for. This is one of the use cases we've identified. And just as evidence, I can tell that many banks in the world, each one does it differently. Some use knowledge-based questions like, where were you born? What's the name of your dog? Or other ones send you a new password on a plastic card when you have a new device and you can't remember your password. And this is just like the evidence that I can give that there's no real solution for this at the moment. So I hope I gave like a lengthy answer, but I hope I answered your question.
Any questions? Okay, thank you, Roy.
Thank you.
Thanks, Roy.
So our next project is IntelliBonds. Mayank, are you here?
I'm just sharing. Can you see the screen now?
Yes.
Hello, everybody. My name is Mayank. I'm the CEO and co-founder of IntelliBonds. So let me give you a brief overview of the company. We are a fintech startup company based in London. We are primarily targeting the fixed income institutional investors, and we are trying to transform this space through providing the cutting edge solutions based on machine learning. Our primary target segment is asset managers, pension funds, insurance, and wealth managers. We already have a very strong executive team with a 30 years plus experience and advisory team. Our primarily development center is in India with 10 to 12 developers at the moment. Since inception in late 2018, we had a very good traction. We are working with one of the biggest name in the industry, including Vanguard, Jupiter Asset Management, and Managing Growth. And also we have established data partnerships with some of the well-known names like Moody's, IHS Markit, and so on. Also, we are part of quite a few accelerator and other programs such as Fintech Sandbox in Boston, Techstar, Empower, Microsoft for Startup, Level 39, etc. The problem we are trying to solve at this stage is the cost pressure on the asset management. So this is one of the reports published by a Bain consulting firm. And the first figure shows that how the asset under management has been growing but the growth in the active part is consistent. It's not growing, and it is getting consistent challenge from the passive investment. At the same time, how the revenue and the cost is changing. So the overall profit is going down from 15 bips to 8 bips. This is kind of a double-edged challenge for the industry, where they are not seeing any growth and the profit is declining. And to add to this, now the COVID-19 has increased the whole digital transformation, or the challenge towards digital transformation even more. The way we are trying to solve this problem is by providing an end-to-end AI human collaborative platform for the bond investors. Our platform is divided into 3 separate modules. Most important, or the core of the product, is the IntelliCredit. This is the one where we are getting, we're using advanced machine learning models to predict various aspects like a credit rating, bond spread prediction. We provide fully automated workflow for credit analysis, also the investment recommendation. The second product we have is the IntelliPM. This is under development right now, and that uses the investment recommendation provided by IntelliCredit. This allows user to create and optimize portfolios for various strategies and various constraints. Third and the last product we are working on is the IntelliTrade. This is to provide trading functionality with a few clicks in the same platform. For this part, we are working with the X Trading as an external partner that will allow our users to execute the trade across the different trading venues, including MarketAxess and TradeWeb. Let me explain the problem I was talking about earlier, the cost and revenue problem, and how our product is going to solve it. So I have picked up the example of a credit analyst and what kind of activities they do in a front office space. So this is a typical workflow of a credit analyst. What are the things they do? They read the news on the daily basis, listen to the earning calls, and pretty much everything is done manually right now. When we are working with the IntelliBonds platform, then almost all of these things are automated, or where the user is a supervisory role. So a user is playing a supervisory role, where they're looking at the predictions provided by the platform. And if they do not agree, they can override it. And if suppose user is overriding at one stage, then all of the future flows will use that override value. So that allows, that's the part where I was talking about AI human collaboration. One more thing I wanted to touch on this one is that based on this one, we are able to, our assessment is that we are able to increase the productivity of a credit analyst by 50%. And that means that if we are saving per bond, per IntelliBonds license, we can save up to 160K to 240K. That is including the base salary of a junior credit analyst, multiple data licenses like Moody's and Bloomberg, and then the standard seat cost in the front office systems. Now, how do we do it? That's the under the hood. What are the key things? For any machine learning space, the data is the most important bit, and the quality of the data. So we are getting the data from the best data providers in each and every space. We are getting the company fundamentals from Moody's and S&P Global. We are getting our financial news for the primary and secondary market from Refinitiv and Bond Radar. Bond Radar is the primary market news provider for Bloomberg. So use the same news which you see in the Bloomberg. And the third is the bond pricing data. IHS Markit is again one of the biggest name in the industry. And the last but not least is the equity market. So we are getting this data from Moody's Analytics. The Credit Edge is one of their product, which covers the equity section as well. So this is combined all these data set. This covers the full spectrum of the data required for any credit analysis. So we are able to provide a superior solution just because we are covering the full spectrum. This is our target market. So in our platform, we are covering 3 currencies right now: GBP, USD, and Euro. So this becomes, so our platform is immediately applicable to our US-based clients. So all the trials we are doing, our contact persons are in London offices, but the rollout plan is across these 3 regions, because these are the, this makes roughly 80% of the overall bond market. This slide here, I have tried to say that the client segments and pricing. What are the key client segments we are looking for? So we divide them in 3 sections: asset managers, pension funds, and family offices here. Based on our conversation so far, we find IntelliCredit is the most attractive product across the board. Everybody is interested, including Vanguard, Jupiter Asset Management in the asset manager space, managing growth in this space here. Other products like IntelliPM and IntelliTrade, they have attractiveness in the smaller, in this space, but the larger asset managers and some of the larger companies, they have their own proprietary or in-house solution, so they might not be interested. So based on our assessment, we're finding that family managers or the wealth managers, they are looking for a full end-to-end solution covering everything. But others may not be maybe interested in 1 or 2 of these products.
Please wrap it up. You already spent your time.
Okay, just half a minute more then. Okay, so this is the competitive scenario here. Primarily, I wanted to say that the reason we are able to provide the cost savings is because we are providing end-to-end solution and we are using the superior data quality. These are the financials we can, I'm happy to share afterwards. I'm not sure if anybody can see these numbers here. This is the team, myself and Igor, we have been in the industry for a while. Igor has been working as a senior credit analyst for the last 15 years. And also we have the strong advisory board already in place, Stan Becker, who has been a former CEO of NN Investment. This is the glimpse of our product here. You can see the buy-sell recommendations and the rating predictions provided. User can customize their universe they want to. And we are raising at the moment 550K at the preliminary valuation of 2.5 million. And that's about from my side. Feel free to ask any questions. Thank you.
Thank you. Questions?
Sure. Thanks a lot for the presentation, first of all. So you talked a little bit about the market opportunity and you translate it into assets under management. Just wondering, realistically speaking, if you look at the addressable revenue opportunity, what do you believe that to be for the products you have today?
So on that one, you're absolutely right. That is the question which we ask many times, actually. Like, we need to know the exact number of the users we want to sell the product. And we try to capture in the same slide, we have the number of institutional investors. So for IntelliTrade product, where we are planning to charge on the transaction basis, that's the dollar number is useful. But if you're talking about per user subscription, which is applicable for the IntelliCredit and IntelliPM, then the number of users you are looking for, that will be the bigger number. So for an example, like companies like Vanguard, so when we are talking to, so they have around 400 people in the one market, so credit analysts across the globe. So this is one firm. So you'll be talking about when such products are rolled out, they start from a smaller location, but they are rolled out to the global location. So to know exactly like how many credit analysts are there, there's no data on that one. So I would love to answer your question saying that this is the exact number. I know that how many credit analysts are there, but we looked everywhere. There's no data on that one.
Yeah, no, I think going forward, I think it would be good to just to see, let's say you take a realistic number, like you're going to own 5% of that market within your home market, for example. What does that revenue opportunity look like? Because for me, that would really help understand sort of, because we look at different type of markets constantly. It would be good to understand and get a little bit of a sense of the size of the market. But I think this also should be something we can discuss later.
Definitely. Thank you.
Later discussion. Okay, thank you very much, Mayank. And our next speaker is Artem Tolkachev. Artem, are you here?
Yeah, I'm here. Thanks for having me on. Just a second. I will show you my screen. Here it is. So, I will use a timer, probably, because I don't want to be the third guy interrupted during the speech. Okay, hi guys, my name is Artem Tolkachev. I'm founder and CEO of Tokenomica, the first neo-investment bank. Next slide. Everyone knows that banking industry presented by thousands of banks worldwide is full of inefficiency and friction. Dozens of neobanks, more than 60 billion in value, are aiming to solve these problems. The situation with the investment banking industry is quite similar. There are plenty of traditional market players who are inefficient and inflexible due to their outdated method and lack of friendly competition. The well-known story with tokens and cryptocurrencies fundraising has shown that there is a demand for cross-border fundraising and investment, but in a fully compliant way. Indeed, capital markets need radical innovation. This is the reason why me and my team founded Tokenomica, the first neo-investment bank that will address the problems of the industry, such as high fees, little innovation, and focus on large market participants only. With the help of digitization and automation of services, Tokenomica is able to make an investment bank cost-effective, innovative, and inclusive. We're using blockchain to embed into securities relevant compliance algorithms and corporate actions and reduce the number of intermediaries. Our long-term vision is to be the first idea in mind of a company that wants to attract external capital. In order to achieve this, we aim to automate the complete range of investment bank services from issuance and underwriting of securities to market making and investment advisory. In addition, we want to provide an opportunity to enter investment banking deals with new payment methods such as cryptocurrencies in a fully regulated ecosystem. A few words about our product pipeline. Since late 2018, we have already managed to automate the issuance and underwriting of securities. Additionally, we have created a digital asset trading venue to make the investment process as flexible as possible. Also this March, we have launched a regulated OTC trading desk and currently working on a full-fledged secondary market for bonds and stocks issued on Tokenomica. Next steps are packaging our services into a white label solution and building up other automated investment banking services such as M&A deal arrangement, market making, asset management, and investment advisory. As of today, our products are live and operating. We've got 20 professionals in our team and 2 regulated legal entities, one of them in Malta for operating with the cryptocurrencies, and the second one in Cyprus for dealing with securities. There are almost 2,000 investors onboarded on our platform and more than 10 issuers on our pipeline. One of our clients is one of the largest Eurobond issuers who is going to issue their bonds on Tokenomica in order to attract 10 million euro from the crypto investors. And we have some small revenue for the last year, so I hope this year will be much better. Our target market is huge as investment banking market. So the total addressable market investment banking services is more than $100 billion US. Serviceable addressable market is European investment banking is more than 16 billion. The core of Tokenomica business model consists of 2 revenue streams. The first one is a success fee for deal arrangement, varying depending on the amount of attracted capital and type of issued instrument. And the second stream is fixed percentage fee applied to each trading transaction amount. Our market expansion strategy is quite simple. We have started with our own network and contacts in CIS region as we wanted to test hypotheses, receive market feedback, and obtain first customers. Now we're expanding our network with the help of our advisory board and our investor to the United Kingdom and Cyprus. So further, we expect to widen focus further to Europe and Middle East, naturally with the help of channel partnerships. The partnership with the European financial company is a natural step in building the new investment bank because it opens a vast variety of opportunities by providing access to a licensed, sophisticated capital markets infrastructure. Initially, Tokenomica was self-funded. Then in the beginning of this year, I know that 10 seconds left, we have raised a pre-series A from Weiswolf Group. The investment was both financial and infrastructural. And currently we're raising Series A round, 5 million euro. Mostly I'm going to spend this for promotional activities to increase brand awareness and product awareness and attract new clients and customers, because the investment banking market is a bit slow. So yeah, this is some of our team members. We're live. Please join us and let's reinvent the capital market. Thanks you for your attention. We'll be glad to answer your questions, guys.
Hey, thanks a lot for your presentation, Artem. Very helpful. So, quick question. I was going through your teaser deck before the meeting got started, and I was just wondering, sort of, how do you think about the valuation you're posing there for the company, and a little bit around sort of, you know, there might be underlying technology of, you know, what I don't understand during the pitch, but it seemed a bit rich to me. So I was just wondering if you could just give me a little bit of an explanation and reasoning how you sort of got to that 14 million number.
Yeah, it's we have a pretty complicated financial model. We have all the revenue streams, which leads us to this valuation. Also, we use the comparative analysis method. So we have something like 5 or 6 European competitors, and we have dozens of US market competitors. So we use both methods, and as well as discounted cash flow methods. So I would appreciate your feedback on our financial model, and would be glad to share it with you.
On that note, can you tell us a little bit about the revenue model, just so we can kind of think about both the value now and the potential value stream?
Yeah, sure. So as I mentioned before, we have 2 major revenue streams. Number 1 is a success fee. We are helping to raise the capital, and we would like to be a part of this of success of our customers. And we have this success fee varying from 0.4 to 4%, depending on the type of the instrument. And we have the trading fee that we are taking out of the trading volumes when the issued securities is being traded on our platform. So the trading fee is 0.25% per deal. So that's basically it.
Okay, thank you very much, Artem. And
Thank you.
Now we have another project. Let me see, Point Pay. Andrei? Andrei, can you hear us?
You hear me?
Yes.
Okay, perfect. Just give me a moment, please. I can't share my screen.
Artem, can you share in your screen?
Probably switch off.
Artem, can you stop sharing your screen? Okay.
Perfect. Just a moment, please. I will share my screen. Is it working now?
Yes.
Perfect. So I greet everyone. My name is Andrei Sviatov. I'm Chief Executive Officer of Point Pay. I will be as brief as possible because I understand, guys, your time is precious. So just key takeaways about Point Pay. We are a UK regulated company, and I believe that the main distinctive feature that distinguishes us from other companies is that we have been operating since 2018, already for 2 years. We self-invested $3.5 million United States dollars into our products. We created full cryptocurrency ecosystem of 5 products. The first product is point-pay blockchain-based bank. It enables our clients to open crypto checking and crypto savings accounts like conventional American banking model. I will show you how it is depicted in the screen. This is the first blockchain-based bank where you can open crypto checking and savings account and earn daily compound interest in tokenized gold, Tessera gold, Bitcoin, Ethereum, and Tessera USD, and as well as point-pay PXP token. And the second product of us is a point-pay crypto payment system. This product is launched as well. You can buy crypto and sell crypto with your debit and credit cards. Currently, you can conduct payments using USD, Euro, British pounds, Australian dollars, Canadian dollars, and all other currencies. We currently support 12 currencies. Mainly they are focusing on European Union, and you can also sell your crypto and withdraw the funds to your credit or debit cards. Quite convenient. Another product of us that we already launched is our point-pay crypto exchange. It's pretty conventional exchange. There are 3 kinds of orders: market, limit, and stop limit orders. We also have a quick exchange conversion function and referral program on this exchange. We pay 50% from the system fee to our clients that which refer their friends. We have quite attractive banners that our customers can use. We also have my referral section where where our customers can track their revenues that they have from trading of their referrals. We are currently paying this fee for 3 currencies: Bitcoin, Tether, and Ethereum. Another product is a point-pay crypto wallet. It is launched as well. It is designed for daily use. You can receive crypto. I will just show you the wallet. You can receive crypto, send crypto. We are currently supporting 4 currencies over here, and track price changes of your portfolio. It is depicted in the screen as a diagram. We also have our own token, point-pay token, PXP. It is ERC20 Ethereum compliant token. This is the main financial instrument within our ecosystem, and it is already integrated into the bank. So if you buy the token and make a deposit into the bank, you can earn 15% annually. If you have this token, you can reduce maker and taker fees on the point-pay crypto exchange on a progressive scale. It is also integrated into our point-pay crypto wallet, as I have just demonstrated to you. We will also integrate this wallet into our payment system, and our customers will be able to pay lower fees. Currently, we accept Bitcoin and Ethereum as a payment methods during our token sale campaign. And let's return to our main page, our landing page of our site. So we are McAfee secure site, and we're also working with trusted site company. We have high ratings from world leading rating agencies like ICO Bench, ICO Marks, ICO Top, and etc. And moreover, we have 26,000 customers that are already working with us, I mean clients. And I would like to share with you point-pay mobile banking applications. I'm not sure if you can see it, but I'll show it to you here over the screen, because it is like private, but you will be able to open crypto checking and savings accounts just in your mobile phone. You will be able to deposit some crypto here through QR codes and send. We will also integrate into these mobile applications for Android and iOS our payment system. So you will be able to buy crypto with your debit and credit cards and instant swaps will be of currencies will be also available in our application. The release is scheduled for September 1. So we are reliable. We have a reliable partner. So guys, if you're looking to some company that will be a market leader within 2 years, here we are. Thank you very much for your time. If you have any questions, I'm pleased to answer them.
Thank you, Andrei.
Hey, it's Lawrence here. Thanks for the presentation. Can you maybe quickly address a little bit on you say you're a regulated entity? Who regulates you at the moment, and sort of how is the process, and what type of ruling do you particularly need to apply to as a platform like this?
So we are a UK regulated company. We are working within UK jurisdiction.
Okay, so you're regulated by the FCA.
No, the fact is that when all operations are done in crypto, no license is needed in order to operate with crypto. Within our platform, we are operating with crypto only. We are not working with fiat, but all fiat payment services are conducted by our partners, Intercoin, Sendwire, and Anycash. In our plans, we have to obtain full banking license in the Cayman Islands and electronic money institution licenses in the European Union and Singapore.
Okay, thanks.
Thank you.
You're competing with, for all four of your businesses, you're competing with larger companies that have more cash, well capitalized, and brand. So what is your edge?
Just, you mean the reason why we will, or what exactly?
So every one of the four businesses you have a big competitor with a lot of cash and brand and a network, right? So what is your edge?
Okay, I got it. So we are focusing on mass adoption. What does it mean? Just imagine that not so many people have an access to crypto banking services. Not even everybody knows what Bitcoin is, how blockchain works. So we created PointPay crypto school with 20 video tutorials where we explain how to start trading in the cryptocurrency market, in order how to start generating profit trading on PointPay exchange or on other exchanges. It doesn't mean at all. So just like mass adoption will be the key to success. We will present our PointPay crypto school within 2 weeks, and those customers who have PointPay token, they will reach an early access to these videos, and this helps us to sell our PointPay token XP.
Andrei, what would your plan be to come into the US market?
Thank you very much. That's a very good question. So in order to come to US market, first we would solve legal questions, so legal issues. We would obtain Regulation D filing because we are conducting token sale, and in order to conduct the token sale, either we make Regulation D filing, or we don't come to US market because, but our token, PXP, it is Ethereum-based token, and Ethereum-based token, it is not a security.
Have you dug in deeper to what that filing would look like? Because if you're buying in mass, you would probably pretty close to classify in the US SEC as like a hedge fund, especially holding all of these coins.
Sorry, didn't get you. Could you repeat, please?
I said, how deep have you done the research into the Regulation D, and where would you be classified? Because I've seen other individuals that have created exchange that automatically get classified as a hedge fund.
Since we are Ethereum-based token, and Ethereum is recognized as a non-security in the United States. So if PointsPay token PXP is Ethereum based, it is recognized as a non-security. Moreover, we conducted our own research. There's a Howey test which can define if the token is a security or not. And we conducted this test ourselves. And we are not a security based on the results of Howey test. And publicly, Ethereum is recognized as a non-security.
So, and following off that, your PointPay token, what's that backed off? Is it backed off Ethereum?
Yes, it is created on the Ethereum platform, correct.
Okay.
Okay, thank you very much, Andre. And we have the next project, Xcube. Andre, can you stop sharing?
Yeah, no problem. No problem.
Alex, are you with us?
Absolutely. I'm sorry. Can you hear me, guys, now?
Yes, definitely. Please
Very
share
good.
your screen.
Okay. Let me share my screen right now. Okay, perfect. Well, we're awesome companies being presented. Can you see my PowerPoint right now on my full screen? Awesome. Thank you. All right, guys. Well, we are Xcube, and this is our journey into real financial inclusion in Latin America. We have created Xcube because we realized that millions of Latin American families depend on money remittances sent by family members who have migrated abroad as their only method of economic support, currently provided by traditional companies that charge abusive rates between 12 and 18% and provide them with a very inefficient and obsolete service based on a cash-to-cash model. This represents a tremendous opportunity for us, first, to bring digital transformation in remittance to Latin American families, replicating successful business models implemented by other companies in other regions, like TransferWise in Europe, Exumo Remitly in the US. Then to break the regional monopoly of traditional remittance companies such as Western Union, MoneyGram or RIA in Latin America. And last but not least, to provide real financial inclusion to the unbanked Latin American population that lives of money received by family remittances by providing financial services and conversion strategies, which will allow us to score them and provide them with credit tools, improving their quality of life. We believe we are the solution to this problem because we are the first peer-to-peer payment ecosystem in Latin America based on remittance flows. We transform the way people send and receive money from, to, and between Latin American countries. While other remittance services end at the cash pickup window, our vision is to go beyond the remittance. What we do is we target customers that are used to send or receive money through the traditional remittance services. And by giving them tools such as virtual accounts, wallets, plus a debit and prepaid card, we can deploy financial education programs to promote conversion from cash to card, card to wallet, and then create a payment ecosystem based on the remittance flow. Once the conversion is done, we are able to score the users based on their income and the usage patterns and give them credit financial services, providing them real financial inclusion. We focus on intra-regional corridors, the corridors between Latin American countries, and the flows between these countries with North America and Europe, which represents a total market potential of over $200 billion a year. While in other regions like Europe or the US, there are hundreds of traditional remittance companies competing, Latin America has only 3, Western Union, MoneyGram, and RIA, and Western Union holds 80% of the market share. On the digital side, digital remittance companies, the traditional ones, they only focus on Latin American countries as terminating destinations. There are no digital companies originating from Latin American countries, except for a few small local initiatives. Our service is based on a proprietary digital transactional core that operates as a virtual account that can be accessed via a mobile app or a website, associated with a debit and prepaid card that provides the users immediate access to their funds. Our transactional core has multiple APIs that allows our platform to easily integrate with a wide variety of partners around the world that are part of Xcoup's global network. We currently provide termination to over 90 countries around the world, and we run our transactions over multiple payment networks to guarantee service delivery and redundancy. Those networks are Visa, MasterCard, Ripple, Tunes, Red Credencial, Grupo Affinitas, and others. Our business model is based on no hidden cost scenario, combined with a simplified cross-border process that drastically reduces transfer costs, replicating successful models implemented by companies like TransferWise using an Astra Global accounts. And with that, we are able to bring down the transfer cost between 3 to 5% instead of an 11 or 12% as an average that traditional remittance companies charge. Our go-to-market strategy allows us to quickly scale up and easily replicate our operations, expanding into new territories, reaching 27 countries within the next 24 months. Our 10-year outlook allows us or expects us to reach 25 million users, that each one of them makes an average of 7 transactions per year. And this number is pretty much validated with what World Bank says, that each remittance users make transactions per year. We will reach 166 million transactions per year on the 10th year, which represents a volume of $66 billion. This will represent or allow us to reach 11% of market share within the corridors where we operate, representing a total market share of 4.6% of the total global market. We use a 10-year projection since it takes us between 2 and 3 years to have all 27 markets up and running. Therefore, 5 years would not suffice to show relevant results for all markets. Our marketing costs represent 54% of all of our OPEX. Our customer support represents 8%, and this is validated with similar models from other companies like Exum or TransferWise. We expect to reach an IRR of 71% and a net present value of $1.7 billion. We have already gone through 3 funding stages of our first angel stage of $100,000, where we started the project. Then we had a second round of a friends and family investment of $400,000. And we had then a seed round of $4 million with a company that actually provided us with processing services and licenses in 14 countries, which helped us reach a market cap of $20 million at the end of 2019. We're looking for $5 million right now. Basically, we will use that money to scale up all current corridors, which are 7 so far, and to open up new corridors to be able to reach the 27 countries. Our management team is formed by highly skilled professionals, all of them with vast experience in startup projects, all of them with successful exits. Boomerang.com, Velocom, Whitebooks, Technicis, Infocorp, Netinfo, Grecia Processing, among other projects, and this guarantees delivery and executions of all areas of our plan. Well, I try to put all our company in 5 minutes, so I hope actually it was clear for you, and I'm open for questions. Thank you.
Thank you.
Alex,
Yes.
what's revenue right now look like, and what's projection this year? What's revenue look like, and also how are you guys distinguishing your revenue model against the current competitors?
Okay, that's interesting. We started our company honestly in December last year and operating in February this year. Okay, so we are quite at an early stage of operations. We expect to have a revenue of less than $1 million for this year. It's a very low revenue, okay? Because the revenue in our side, it's based on the number of countries that we are opening, okay? And the number of corridors that we are opening for each country. So the thing is that this is like a hockey stick type of growth, right? We expect to be cash flow positive and around in the year 4th. And our revenue model, it's pretty similar to what TransferWise actually does, to other digital remittance companies. The difference that we have compared to other models is that we do not only base our revenue model on the remittance fee that we charge, but also what we try to do is build an ecosystem with the money that comes out of the remittance. So far, all the remittance volume right now gets lost once the customer picks up the cash at the window, okay? By giving them tools like an account and a debit card and a prepaid card to use that money, we start actually making money out of the money that he receives by, you know, the transfer fees that commerces give you whenever actually the customer uses the credit card to buy goods or services, correct? So, so we intend to use the money that we collect out of the ecosystem also to be able to reduce more the transfer fee to be more competitive against the market. So far, we are being competitive because we charge between 3 and 5%. We believe that actually we can reach the point that we are so competitive that at one point we wouldn't even need to charge for transferring the money, but the company will survive by the ecosystem, pretty much like PayPal does, okay? The only difference is that PayPal or Mercado Libre, which is also another example here in Latin America, right? They create the ecosystem based on the money that is moved on e-commerce. In our case, we create the ecosystem based on the money that is moved on remittances.
What does customer acquisition costs look like if you're based here in the U.S. and we know that the majority of money will go from U.S. dollars to Mexico? What's that customer acquisition and LTV for that customer?
To be quite honest with you, we are a US-based company, different from Exum, for example. We do not target now US customers, and there is a reason for that. We believe there is a huge opportunity on targeting Latin American corridors instead of targeting the US to Mexico, for example. If you look at particularly that corridor, US-Mexico, which is huge, we're talking about $30 billion, right? You have like 300-400 companies competing for that market, okay? But if you look at the rest of Latin America, there's about $50 billion that it's pretty much based on remittances that go from intra-regional corridors. And as an example I can give you, yes, US to Mexico is $30 billion, but if you compare what it's moved around in between Mexico and Central American countries, you're talking about somewhere around $6 to $7 billion only in that region. And if you look at South American corridors, you're talking about another $30 billion that are moved between, regional corridors. And as an example, you have Argentina, which is an originating country that currently has outbound remittances for almost $5 billion. And in those corridors, you only have 3 companies competing: Western Union, MoneyGram, and RIA. And for example, South America, Western Union leads up with 90% of the market share on a cash-to-cash traditional model, right? And you don't have Zoom, you don't have WorldRemit, you don't have Remitly competing on those markets. I mean, all those companies focus on the US, right, to Latin America. So what we do is we basically focus on regional corridors. We acquire customers. We become a large Latin American remittance company. And once we are positioned within the local markets, then we go to the US. And then and the truth is, we're gonna already have the majority of customers residing in the US sending money to these countries where we are already positioned as customers, because we acquire them not from the sender side, but from the receiver side. We believe there is a huge opportunity targeting receivers instead of senders. Most of the remittance companies target the sender, okay, and acquire the sender. There is a huge opportunity providing a different service, targeting the receiver, telling them, okay, instead of receiving cash at the window, okay, where you have to receive it usually on business days. And you know, and that is where we differ from other companies, right? Where you have companies that even actually the digital companies focused on creating a digital process that allows you to send money 24/7, like shown in the US. Those digital remittance companies still depend on a traditional physical point to collect the remittance. Our model, okay, is based on a digital receiving model, right? So basically, not only you can send a remittance 24/7, but also you can receive a remittance 24/7 because you receive it on your account. I'm sorry, Helena.
Yes, thank you very much. I'm
got it.
interrupting you, but I want to give everyone a chance to talk.
Sorry about that.
Much. Yes, thank you. So we have a next project, Coin Rule. This is the last project. We're sorry we're running a bit late.
No problem.
Hello everyone. Hi, can you see my screen?
Yes.
Cool. So guys, earning money can be fun. Today, if you're a millennial and you want to invest some money, the first thing you do, you go online and you buy some cryptocurrencies. You buy some Bitcoin, some Ethereum. And that's the world has changed in the last years. Today, the Wall Street trades are made by robots and by quant floors investment bank. And that's something that's been also acknowledged by the Economist a few months ago. Our typical customer is someone that trades coins because he has no time. So a trader that does manual investing, maybe 1 or 2 hours a week, and he lose so much time. Also, the usual trader doesn't have so much skills, so he would love to get upskilled. This is a typical trader that has a hobby. He trades maybe between $5,000 and $10,000. And also, what he wants to take advantage of the market in terms of volatility. So he wants to take advantage of opportunity, but also to protect his funds. That's a typical hobbyist traders. Welcome to Coin Rule. With the Coin Rule, every hobbyist traders can automatize their trade and save time and money. With the Coin Rule, you can say, if Bitcoin goes down 3%, buy this other coin, for example, Ripple, at this specific price, given several conditions like volume, market cap, and other indicators. Then when you set up your strategy, your automatic strategy, you press play and the machine goes on the market and trades on your behalf. So what Coin Rule gives you, it gives you opportunity to build an algorithmic trade, an automatic trade in few simple clicks. We already launched in over 130 countries, and we have a big focus on the US, and the UK, and Brazil. At the moment, we are generating around $4,600 per month. We have 10,000 users playing with the platform, and we have $2 million volume traders on the platform as well. And we are growing month over month by 25%. The beauty of this is that we are growing with zero marketing. We didn't spend a single penny on marketing. Or the way we do it is we have a very smart proprietary technology for landing pages, and for some keywords on Google, we rank on the first position on the first page of Google. And with that one, we get a lot of organic traffic. This is very interesting statistics. So despite the COVID financial crisis of the last 3 months, our investors in Coin Rule, they actually had 67% profit on all the funds. So what we are today? Today we are a smart assistant for your investment. We are an edutainment experience, so education plus entertainment. And all of this is packaged up with a mission that is a financial inclusion mission. We help normal people, normal hobbies, fight back big banks by giving them this automation tool. The team is myself, Oleg Zanek. I'm a pure Londoner, been there for 11 years. Before that was in Finland and Boston, and worked always in several banks. Also at UBS, where I was part of a team that built UBS Neo, a leading trading platform. Oleg?
Yeah, my background is in banking at Citigroup. I was also at the University of Oxford before, and left in 2016 to do my first startup.
Yeah, and then we have Zanek, our CTO. He was in London, now he's back in Czech Republic, and that's where we have our technological team. And that means that 4 developers in Czech Republic, they cost as much as 1 senior developer in London. So our burn rate, monthly burn rate, it's very low. The full team is 7 people, and here in the picture you can also see our previous investors from the previous round. We did it in July 2019. We fundraised $250,000. And now we're fundraising again. We have several affiliations with other exchanges, and also we are applying now for the FCA for the sandbox to get a robo-advisory license that at the moment we don't need because we don't have any liability in that sense. And I can expand later on if someone is interested in that. But we are planning to get a license in order to provide more financial product in the future. The way we charge is a SaaS model, so monthly subscription. Most of the users, they buy the hobbyist plan, and also some of them buy the traders. And before that, you can try for free the platform with several limitations. The roadmap is very exciting. In January, we launched our new trading arbiter, the new trading interface. It was life-changing for the company. It brought a lot of users, and the usage also increased a lot. Now we are working very hard to deliver the simplest backtesting in the world, and also working on the marketplace. So the ability to take strategies from other people, to rent it out, to buy them, and there's a community aspect in that, and run your own strategies as well and resell them. And then in the roadmap, we have also an expansion into traditional assets, so FX, bond, commodities, and stocks, as well as the blockchain component that will allow the vision to develop further. Thank you very much. I'll open the floor now to the question, but before that, Alex will show you the product in 1 minute.
Yeah, Gabriele, if you could just stop sharing your screen and I'll share mine. I'll give you 1 minute, very quick demo. If you hear me, Elena, can you hear me well?
Yes, now
fantastic. So we have a dashboard where you can see your different strategies and how they are performing. As Gabriele was saying, the way it works is that you connect an exchange, a trading platform such as Kraken. You create an API key, but then we do not touch your funds, so we can only place trades or see your account balances. We cannot actually withdraw the funds. And then if you want to build rules yourself, you go into the trading interface, and then you can either select from one of the ready-made template strategies like this. We give you like a very clear explanation of what may or may not make, like what the rule would be doing. Or if you want to build your own strategy, you can do that very easily. Let me give you an example of a simple rule. So let's say if any of my coins have their price decrease by 6% within 3 hours, sell, let's say sell 70% of that coin to my Bitcoin wallet. So it's nice and easy. In a few clicks, we put together a trade, a strategy. But of course, if you want, you can also make it more complex and add multiple steps and multiple options. You get here like a little plain English summary of what the strategy would do. That's now easy. But of course, if you're doing multi-step strategies, it becomes very helpful. And then you get one more time the summary, and then you press launch live and the rule goes into the market. Maybe just let me show you one strategy that is a bit more complicated.
Yes, your time was over, I'm sorry.
Yes, okay. So this is an example of a strategy that is a bit more complex. And then of course, if you want to buy a plan, you can just do it from the billing page.
Okay, thank you.
Thank you. Any questions, please?
It looked like you were just about to go into this, but can you also use all financial indicators or only cryptocurrencies that are available on the platform?
We have a roadmap. Yeah, we have a roadmap for integrating more and more indicators. So at the moment we have the typical ones: volume, price, market cap, MA, and RSI. But we are increasing them every week, basically.
Cool. Is the roadmap available on the website?
Not one. We can share the pitch deck with you with the roadmap.
If you want to share it now, Gabriele, I stopped sharing. You can show again the roadmap.
I will share all the materials. Yeah. It's okay.
Yeah.
Thank you.
Mm-hmm. Any more questions? No? Okay, I guess
Xavier, I think Xavier wanted to say something.
Oh. Yeah, I was just going to add, if you can share any like early milestones in progress, either revenue or customers that you've acquired.
Yeah, I can just, yeah, we actually showed one slide about that. is this one. Let me just show you quickly. Is this one. So this is actually the metric so far. So we got 10,000 users. We got like $4,600 a month, monthly recurring revenues. And we transact around $2 million at the moment on the platform every month.
What's exciting is that the revenue is growing very quick. We had actually in May, we had around 150% revenue growth. So since we really started to charge for the product in February, this revenue has basically been almost doubling every month.
Great. Thanks for sharing.
Perfect. Thank you very much, guys.
Thank you very much.
Okay. Thank you very much. Well, sorry for the delay. Thank you very much for our investors. We will contact startups after the event with further information, and thank you all. Please send me your Excel sheets, the investors, and see you at our next events. Have a good evening. Bye.
See you.
Bye-bye.